had in the last few years set records for the value of agricultural exports, and that has come to end during the last fiscal year, and it's expected to fall a slight bit further in the coming year. This is largely attributable to reductions in the value of grains and oilseeds exports, and that's in good part because the prices of those commodities are substantially lower than they've been in the past. This weakness in export demand has a lot to do with why the prices for agricultural commodities are low right now. In the past, say following the 2012-13 drought, exports were up more than expected, and that propped prices at levels somewhat higher than they are right now. Now we're seeing very weak export demand and so low prices. We can use three different sources to look at these trends. The trends in overall ag exports that I just cited come from USDA Trade Outlook that's published twice a year, and the last one that was available was in August. And that's what gives this story of weak export demand and export value down slightly right now. There are a couple of other sources we can consult that show that the picture's even worse than that August report suggested. There's a WASDE report that came out in November, and that report shows small declines in USDA's projections, both of volume and value for grains and oilseeds, and it also shows some evidence of the weakness in pork trade that's also happened. One can also look at weekly export reports. The Foreign Ag Service gets reports every time there's a sale in an overseas market, and this includes commitments. And it's a somewhat risky business to compare these commitments and actual sales from one year to the next, because people don't always buy with the same timing as in the past. But the trends of those numbers are for even lower U.S. ag exports, and in particular lower exports for grains and soybeans than is expected in both the August USDA Trade Outlook and in the most recent WASDE report. And this has a lot to do with the weakness in corn and soybean prices that we see right now. So the big question is why? And one of the reasons for this is poor economic performance in the rest of the world. The U.S. is the bright spot in the global economy, even though our recovery is slower than is usually the case out of a substantial recession. But other parts of the world are doing worse, and developing and emerging economies, notably China, are slowing substantially, and these are important customers for our commodities. Maybe more importantly is the fact that both the monetary policy and this story about economic performance lead to a very strong dollar. The exchange rate's an important factor that's historically been strongly correlated with the performance in the agricultural sector, and that continues now. The dollar is very strong. This makes our exports cheaper for our customers. It makes our competitors more competitive in foreign markets, and in some of the competitive markets we've seen even stronger movements in exchange rates than we would see in some of the indices like the USDA Ag Index. For example, the USDA Ag Index has the dollar about 10% stronger than it was last year, but the dollar has appreciated relative to the Brazilian real on the order of 40%. The concluding point is that people in agriculture are concerned by the low prices. Export demand is one of the factors contributing to those low prices, and a strong factor behind that is the exchange